What is going on, everybody? Welcome back to another video. In this video, we are going to talk about the VIX, how to trade it, and how to profit off this, even using super small accounts. So with that being said, let's go on ahead, jump right into this video and get into it. I've been getting dirty money. Okay, guys, I'm going to start this out by saying if it makes dollars, it makes sense. Now, with that being said, that's a very, very true statement, but it has to be a high probability. Now, what am I saying when I mean that? Is we are looking at the VIX. If you are looking at the VIX, you probably already know what it is. It is the volatility, and it's the volatility index. It is what it is. So you guys see I have it up on Robinhood. You guys know I love to show you guys stuff on Robinhood because most people are using Robinhood and their commissions are cheap. But I'm going to go over here to TradingView. It's just an easy access. You guys know I use TD Ameritrade a lot. If you're not new to the channel, if you are new, welcome. Love to have you here. But the VIX, VIX, which is the volatility index of the S&P 500. As you guys can see, if you zoom out of this, it long term wise it goes down. Now, the main question that I get is what makes it spike? Well, obviously volatility. So when the market is just climbing, and I mean, so we're going to look at Q. The Q's here as we're just climbing upwards. Well, you'll see that the absolute opposite is over here. It's just climbing downwards. Now, the volatility index does spike much faster because it is volatile. That is the point of it. But I want to show you guys how to trade this. So, if you guys are on this on Robinhood, you can't use VIX because that is actually technically the future, I believe, of it. I use TD Ameritrade, so I absolutely do use the actual VIX. But I wanted to come over here because I've had a couple of people actually ask me about this and do I trade it? I don't trade this a ton, but I'm going to show you how I do use it in great days like we had this week. So as you guys can see, it popped up this week, obviously. So if we look at it, it popped up at its peak at 17%. Now, this is something that I love. Now, I don't buy the stock, but I trade the options, and I'm going to show you why. So, I love it when the volatility index will spike. It's a great time to sell options. Now, you guys know I love selling puts. We're actually going to do the opposite on this one. We're going to sell calls, and this is where it comes in. Things get a little bit different. You guys are so used to me buying or selling puts. I'm actually going to be looking at calls on this one. And on these ones, I usually do weekly, actually, believe it or not. You guys know I'm a big advocate of the 45 days out, and then I collect at 50% and close my position or roll out into a different one, so on and so forth. But with this one, what you're actually going to do is we are not going to sell this naked, meaning we are not going to just sell the call. And I'm going to show you why here. So if we sell the call, you guys are going to see max unlimited. If you're a risk reward trader or a high probability trader like I am, you think that this is an awful trade, which you should. Common sense says, oh, this is an awful trade, even though your chances of profit up here are 84.91%. Great probability of winning. I'm not going to disagree with that whatsoever. But we want to win trades and we also want to manage risk. Oh, we got to manage risk on this. So what am I going to do? Well, if we're only getting 11 cents, which is okay, I'm going to switch and I'm going to run this into a credit spread. Now, again, you're going to collect more premium off of your money and be able to get a better return if you are using something like TD Ameritrade in the VIX. But UVXY will work because it's technically basically the same thing. But I'm going to go over here and you can see the further you get out. So this one's going to be $200 and our max profit is going to be 7. Now you may think, oh, this ain't a great return. You're not technically wrong, but what I will do as well on these, now these are short, this is a short-term trade. Again, if you want to make more and have a higher probability, guys, it's easy. All you gotta do is come out here, sell a call, come out here, and again, this is something that you all need to be doing is looking at the prices that you're selling these on. Now, I know it's not sexy, it's not what everybody wants to do, but let's look out a month. You can see it down here. You can see the months out here on how much it falls and how, when it spikes, when it does spike. And I think this is why we missed this trade, or I didn't make the video earlier in the week. I wanted to show you this. So this right here, this day was a fantastic day to sell on them. I would have given it a shot on a credit spread like what I'm going to show you. And here's why. So UVXY, 42 days out, I will sell, let's say, a 12, or I actually want to be a little bit further out. I like this one a little bit better. So again, we're not just selling this with nothing on here. We are going to come and buy this. Now, this is $15 for $186. This is but it's a very, very high probability trade as long as you think the market's just going to continue to ride upwards. Now, if you, and with the Fed being cutting rates and things like that, that is where your risk is on this one. Now, if you think that the market's going to go crazy, go sell a put on this one. But again, you will get a better return, and I've noticed this personally. If you're trading on TD Ameritrade with the VIX, is going to give you a better return on your cash. But this is a great way when you see these days that pop up like on UVXY, where you get these giant green days here that are movers, and then you can just write it back down. And I actually have this trade on right now still. It's set to expire next Friday, basically the last Friday of the year, but I'm going to cash in on it and not much of a worry. I'm actually already up 25%, so I may cash it out beforehand. Hopefully the market opens up on Tuesday and I'm able to take that off. But this is just a simple trade for everybody to be able to make. And again, you can play with these numbers. You know, maybe you want to make $8, or no, that's not right here. Hold on. So yeah, you can make a couple dollars here and only risk a few. But this is not what I'm looking to do on these. I want high probability trades. Again, me being me, I want that decay to really hit. I will play around with the dates and see where my best deal is. And if we're going to sell, it's going to be back over here. Again, you guys know I like that 20% number. When I do go to the VIX, I will go higher. So this one here, and then buying. Again, the only reason you're buying back another call to create that credit, to create that credit spread for a call credit spread, is just to reduce that buying power and to not get that max loss, which can be unlimited, which is unlike selling the puts. I think this is a very high value. This is not a trade that I'm going to make every day, and these aren't great examples. Hopefully, here soon we'll get a pop in the VIX, and I'll be able to show you guys exactly what they look like, because these ones right now are not near what they normally are. And I think that's something that a lot of people are going to be missing right now. Like, wait, why would I do this? Well, because it is a high probability trade, but we can't really show it right now because, well, there's no volatility. The volatility is coming down. And you guys will notice that. When do you sell puts? Well, I sell puts when the market comes down because it's going to give me more premium, better cash on cash return, and that's what happens. But I hope everybody enjoys this video, guys. If you guys have questions, if you have any other stocks you want me to look at, go on ahead, comment them below. I will get to them. I respond to every single comment. I love you guys, and Merry Christmas if I don't see you until then.